Hey, so this is a momentum-based strategy that I implemented and took on February 12th. Um, so this is my analysis and just going over the trade. It has multiple confluences. It has, price action. It has some indicators that gave me confirmation overall. So overall, I think this was an excellent trade. So I'm just calling it a momentum trade. But it did include a demand zone, Fibonacci retracements, and some trend lines. And yeah, so let me just go over that. All right, so let me start out here. So I have the 1 hour, 15 minute, and the 5 minute on NQ on the bottom. And the top is ES. Same thing, 1 hour, 15 minute, and 5 minute. So here I had a Fibonacci retracement level drawn out. So swing low, swing high from Friday. And then here we did bounce off the 61%, the golden ratio, golden zone. And then here also this resistance turned into support. So that was a good sign. As you can see, this is a candlestick that actually formed for this pop here. Then we went up and then we started to range here and we started to form this triangle pattern here. And with this triangle pattern, we did break down out of this triangle, but since I didn't go short here because the trend overall has been upwards, so I didn't want to go against the trend for the past couple of days, even though in the pre-market, we were, having a pullback. So that's one thing. And then second, as you can see here, we had this demand zone. I mean, it did break out briefly, but I would still consider that a demand zone. And then here it bounced off here from the 50%, around the 50%, and this demand zone. So that was a good sign as well. They gave me, okay, we're probably going to bounce off upwards. And then here, I did have some trend lines here drawn out from Friday in the regular trading sessions. So this does not include the pre-market or aftermarket. It's just a cash session. We were breaking out here. So this was the area that was breaking out. So here, we probably faked out so many traders that just like to trade patterns. So they were looking for a triangle breakout to the downside. And once they saw that, they went short. But if they would have waited for more confirmation or they have some other confluences, they would have seen that this was not a good entry. To go short, I would probably wait until we broke down here, the low day. That's what I probably would have done. But I did go long. So here, we start to go upwards. We broke the 9 EMA. I like to use the 9 EMA. We did break VWAP. Okay, so it was this candlestick that I went long. So I knew that there was some demand, some support in this area. Okay, so once we started to move away from it, that's when I was looking to go long. So I went long here. I was very patient and never hit my stop loss, so that was good. And then I started to gain more confirmation as the momentum was turning towards the upside on the MACD, and we started to just go on flying forward. So this was a 1.5 R that I took. Since we did have a supply zone here, I was not too comfortable going way beyond the high of day here. This green line was high of day. So I was just willing to, okay, in case we fake out on the high of day, I am willing to just take my 1.5 R and just be okay with it. So it obviously started to go higher, which is fine. And yeah, so I took my trade. I also did see some confluence here with ES. It was moving in tandem. I started to move upwards and started to move with ES as well. And I don't know why I don't have this drawn out, but we did have a demand zone here in this area, and you could tell by the wicks here and the support we probably had a demand zone from here, 545, 542 to 540, and we started to move upwards. Okay. So yeah, this is a strategy that I took on a momentum-based strategy. Again, I don't know what to call it because there's so many things that I use as Fibonacci's, demand, trendline breaks, triangle breakouts, momentum on the MACD, ES also in Confluence. So this was an A+ setup that I took, and I'm very happy about it, and hopefully this helps others.